All right. Good afternoon, ladies and gentlemen. Welcome to session 4 of the Jumpstart with USDA in New Hampshire series. I'm Jeremy Fowler. I'm the public affairs specialist here for the Natural Resources Conservation Service. You're not here to hear about us today. You're here to hear about rural development and the programs that they offer through USDA's Rural Energy for America program and the Value Added Producer Grant program. So I'm going to hand it over to Mr. Yearman here, who's going to take us a walk through first few slides and get us going here. So welcome and thanks for coming. Over to you.
All right. Okay, thank you. Thank you very much, Jeremy. Good afternoon, everybody. Thank you so much for attending this part of the series of webinars put out for Jumpstart Your Farm Operation. As Jeremy mentioned, we're going to cover two different programs that we offer at Rural Development. I'm Ken Yearman, the Business Programs Director, and also presenting is Tracy Rexford. He's our Energy Coordinator. We will have our contact information, full contact information shown at the very end of the presentation. So just a little bit about rural development. We're a two-state jurisdiction. Today we're talking just about New Hampshire. We do have over 80 loan grant and loan guarantee programs, basically spread out over 3 different divisions: business programs, which is where Tracy and I work from, community facilities, and housing programs. Roughly 25 employees spread out between the 2 states. And if I pause, it's because I'm thinking, not because I'm disorganized. Throw that out there. Okay. Before I turn it over to Tracy, who's going to get into Rural Energy for America first, I'll just mention we put the application deadlines up here. These are the ones that are coming up next in this fiscal year, although September 30th is technically going to be fiscal year 25 for REAP. REAP is offered quarterly. That is a big change from the very recent past. REAP is a farm bill program, and traditionally REAP has been offered twice a year, March and October. At the end of those months, that is still the case. Well, the dates are a little bit different. So we still have farm bill money, but we've been added a large amount of money from the Inflation Reduction Act, or IRA. And they did a lot of changes to REAP with that introduction of IRA, and the application cycles are now quarterly. I won't steal any more of Tracy's thunder. Value added, these are the deadlines. Paper applications are due April 16th, and electronic ones are due April 11th. So without further ado, I'm going to turn it over to Tracy, who will talk about REAP. Take it away, Tracy.
All right, thanks, Ken. So REAP is designed to help small businesses and ag producers be able to install renewable energy systems or save energy by making energy efficiency improvements. We do this through grants or loan guarantees. A loan guarantee is just a credit enhancement that applicants would apply for through a local lender. The Inflation Reduction Act that Ken mentioned, or IRA, has provided just over $1 billion in funding for this program nationally and has increased the grant maximums. Some of those funds are set aside for underutilized technologies like wind and hydro. To apply as a small business, applicants must be located in a rural area according to the eligibility map on our website. Some areas around Manchester and Nashua are not eligible areas. It's kind of a patchwork of areas down there. The businesses must also meet size restrictions and be considered small as outlined by the SBA. based on their primary NAICS code. To apply as an ag producer, applicants must receive more than 50% of their gross income from ag production. Some ag producers are also registered as a small business in the state and may apply as a small business if they don't meet the 50% gross income from ag production requirement. REAP grants are reimbursements, so the applicant must be able to fully fund the project for a grant to be approved. Next slide. To apply, applicants must get a unique entity ID number and then register their business entity in sam.gov prior to the deadline. Applicants should reach out to me to discuss their project, location, type of business, estimated costs. I'll then be able to email the appropriate application materials. Depending on the project cost, pro forma financials and tax returns may be required. All applications will require proof of matching funds, such as bank statements or loan commitments showing funds are available. Detailed cost proposals, project site plans, and installer qualifications will need to be provided. Project costs incurred before a complete application is received are not eligible. An environmental and historical review must be completed by the agency. So any construction completed prior to us completing this review are at the applicant's own risk and may jeopardize us from being able to successfully complete a review. Energy efficiency projects will require an energy audit or assessment completed by a qualified third party. Renewable energy systems require either electric bills showing historical energy use or power purchase agreements if generating and selling the power. Applications are competitive and are scored on environmental benefits, energy generated, replaced, or saved, commitment of funds, project location, previous grants received, simple payback, and state director points. All right, next slide. There are two categories of REAP grants: renewable energy systems, which can go up to $1 million, and energy efficiency improvements that max out at $500,000. There's also a minimum project size restriction. Applicants can currently apply for grants up to 50% of the eligible project costs if their project doesn't produce greenhouse gases at the project level, or if it's an EEI, energy efficiency improvement. All others can request up to 25%. Next slide. Here's a couple examples of the impacts projects have on area farms and businesses. This first one is Sunset Lake Farm that installed a 176 kilowatt rooftop solar array, which generates 75% of their electricity, saving them about $37,000 per year. Next. This is an example of an energy efficiency improvement done at Patch Forest in Lebanon. They received a grant to help purchase a reverse osmosis system for their maple business and are now saving around 50% on their fuel costs. Next. The types of projects that we can cover include grain dryers, reverse osmosis systems, wind, hydroelectric, solar, lighting upgrades, digesters, geothermal heating and cooling, refrigeration, and much more. But here's a general list of some ideas what we cover. Next. Lastly, we also have a technical assistance grant or TA grants that eligible entities apply for to help assist REAP applicants in submitting complete applications. This may include help with registering in SAM, getting energy audits done, and filling in the REAP forms. In New Hampshire, the current technical assistance provider is Clean Energy New Hampshire. And if anyone wants help with applying for REAP, they can reach out directly to Gabe. You'll see his email and phone number are listed here. And that is all I have for REAP. Back to you, Ken.
All right. Thank you very much, Tracy, for that great presentation. A couple of things I'll just call out is REAP is by far our busiest program in business programs. With the influx of money that we have, roughly about $1.5 million now per quarter per state in IRA funding. It's a significant increase in what we're used to seeing. So we're really hoping that deploying all of this money into New Hampshire is gonna really make a big difference in small businesses and for the environment as well. Also, I'll mention TAG, which Tracy just mentioned, is a pretty new program this year, in fact, which is great. It's going to help a lot of farmers get some technical assistance in applying for a REAP grant. Some people, just are so busy that it's hard to get to the application, or maybe even have a hard time understanding it. And that's what TAG is for, is to help walk people through the process. I'd be remiss, though, if I didn't also mention two other places in New Hampshire that we have funded in the past through another program we have, New Hampshire Community Development Finance in Concord has an energy audit program, which, as Tracy mentioned, some of the energy efficiency projects might require an energy audit. You can see Scott Mislansky at New Hampshire CDFA, and those audits can be basically bought down by our grant funds, and with you only paying 25% of the cost of the audit. It's a good program. In Lakes Region Community College, they have a grant from us as well, which is more of renewable energy assistance, citing how do I go about getting into solar or biomass. So certainly if you need their contact information, please reach out to us after the presentation and we can certainly forward that to you. I'll jump into value-added producer grants. Now, I'm not going to lie, this is a pretty complicated program. It's typically farmers who use this program will employ a grant writer. If not a grant writer, then a technical assistance provider to help them through the process. There's a lot to applying, but it's a really great program, and we've seen it make a big difference. The reason this program was started about 2001, I think, is really to help farmers expand into new markets, increase their revenues, maybe generate new products as well, create new marketing opportunities. But it's all designed to assist agricultural producers reach more people with more products and expand local food. It's a pretty busy slide. Some of these things I'm going to mention have separate slides all their own, and I'll elaborate a little bit further when we get to those. But these are grants, and much like REAP, they're reimbursement grants. You have to spend the money before you get a reimbursement. However, whereas REAP is a one-time reimbursement where you get the money when your solar array or whatever you're funding is completed, these are multiple disbursements over up to a 3-year period, as you can see. The award amounts are $75,000 for a planning grant, which is typically used for feasibility studies. They must be done by an independent third party who's qualified to do a feasibility study. Could be a market study, maybe a business plan. That's really the kind of the limit of what a planning grant is used for. Working capital grants can be used for quite a few other things, and I'll get into that in a minute. All applicants have to have a one-to-one match. So if you're applying for 75,000, you've got to have 75,000 of your own coming into the project. It's cash. There are some eligible in-kind contributions, which I'll touch on a little bit more on a different slide, that can be used towards your match. What value added isn't used for, it's not to train people how to be farmers. It's not for technical assistance, it's not a loan, and it's not intended to be a continuous stream of capital. To be eligible, there are 4 basic types of eligible applicants to the program. By far, independent producers are what we see. And try to find the official definition of an independent producer. Well, I guess it's neither here nor there. But basically, you own the business and produce an agricultural product. I mean, it's just about as simple as that. Agricultural producer groups, we haven't seen any of those come through yet. Rancher cooperatives, haven't seen any of that at the moment, or majority control producer-based businesses. So small farms are primarily what we see apply to the program. Pause for just a moment. There are 2 things that you really have to demonstrate in an application. That you're going to increase your customer base and improve revenues. I mean, that's honestly what it's all about. And you do that really by showing your baseline, your revenues for the past year or so, and your customer base. And then you're simply projecting what this grant is going to help you do to make both of those go up. Slide. So to apply, you've got to show that you're going to be doing one of these 5 things. Either change your product into something else, such as wool into rugs, cattle into packaged meats, wheat into flour, milk into cheese. So that's really the value-added activity in that category. And it has to be irreversible. Produced in a manner that enhances value. Technically, that's really just you're doing it by using a recognized standard that maybe you're doing organic carrots or free range chickens, something that differentiates your product from others. And along those same lines, physical segregation is that while you're doing or producing your value-added product, you're keeping it separate from any other similar products that you might be doing on your farm. You may produce non-GMO corn, and you could produce GMO corn for different purposes, but the grant's only going to be used to help produce and market the non-GMO corn, in other words. Renewable energy projects, fairly limited in what can be done with a value-added producer grant for that category. A methane digester could be used, or it could be supported, as long as the manure is not trucked in from another farm. It's going to be manure produced on site and fed to the digester and used to either sell to the grid, therefore increasing revenue for the farm, or used directly by the farm for their operations. Locally produced product is defined as something that's going to be marketed and distributed, 400 miles from where you're growing it. Plan and grants, I had already mentioned, were pretty limited in scope. We do get a lot of those, though. Examples of working capital, there's a few there. Looking for a little more of a coherent list here. But, we see a lot of packaging and labeling, folks wanting to promote their new products, expand a website or create a website, and processing costs. It can't be used for expenses related to growing that product that you're going to turn into a value-added product. All right, it's only the expenses used to make it value-added. It's not for buildings, it's not for equipment, and you've got to create at least 50% of the commodity on your own farm. So you can't pay yourself or associated parties, family members, for producing that commodity. Matching funds, cash, loan, line of credit, applicant, family member, in-kind labor contributions. Again, you can't pay them, but their labor can be included as a contribution up to 25% of the total. Third-party cash, if you can find it. Non-federal grant sources, can't mix federal grant funds with this. Restrictions on the matching funds, kind of a no-brainer. You can only spend it on eligible expenses from eligible sources without a conflict of interest. Spent in advance of grant funding, that means, I don't really like that wording. It means if you get the grant and you're going along your 3-year period, when you submit for a reimbursement from the value-added grant, you must have spent your matching funds in advance of getting reimbursed for the grant. That's what that means. Okay, so I'm going to open it up for questions for either program that we have covered today.
All right. It looks like we did have one from Trisha Ingalls about how do you find out which communities are eligible for the higher percentage of support?
I'm wondering if Trisha is referring to the energy communities that's in the notice for REAP. And in New Hampshire and Vermont, we do not have any energy communities. So all eligible areas. So if you're in an eligible area, then you would be able to apply for the same percentage as anyone else in any other community. And I can put in the chat the link to, I'll put in the chat and link to the eligible areas in our states. All of Vermont is eligible, and then, like I say, some of Manchester and Nashua areas, kind of south and a little southeast, are ineligible.
All right. I have enabled some microphones out there, so if you'd like to jump on and ask your question verbally, please feel free.
Hi, sorry, I couldn't find the chat on my phone, but I just had a question about the REAP program and vacuum pumps for SAP. Would a vacuum pump be eligible under the REAP program? Oh, I can't hear you.
A vacuum pump is generally an eligible project. It would require an energy audit to be done. And that audit would need to show your 12 months historical use for utility costs and how much energy the system that you're replacing used, and show us how much energy you're going to save by doing that measure.
Okay, thank you.
Yeah.
And don't be shy out there. If you have a question now is the time. We are far ahead of schedule. Everybody might actually still get some lunchtime in here today. So feel free to ask us some questions. We're here. We'll stay here for a little bit longer. So floor is open.
If nobody speaks up, I wanted to just butt in again about the VA, the Value Added Producer Grant. That's a grant that we actually were awarded, and I just wanted to encourage other people to apply for that because it was a huge benefit to our sugar house. We used our raw commodity sap and we applied to get help turning it into syrup, and then we were able to spend a lot of money on marketing. So I really encourage you guys to do it. If you need to hire a grant writer to do that, go ahead and do it. I had a gentleman named Elijah, and he was incredibly helpful. It took a couple of phone calls to figure that program out, but don't be shy. And the thing that was really encouraging about it is when I applied a few years ago, I said, what are the chances we get this? And he said, well, last year it was 100%. So really, it's worth the effort. Give it a shot.
I could pipe up and say fiscal year 23, it wasn't 100%, but it was close. I'd say maybe 80% success rate.
Well, thank you for that. It's always good to hear positive feedback. There are also other programs like NRCS also can work with you on an RO, not to steal any of the thunder from rural development, but some of these programs are slightly different between agencies. But that is one that, if you are a maple producer out there, I personally am on a small scale, or my father is, I should say, and the RO was an incredible change to the operation. Less firewood to chop and cut and stack and restack and move and this, that, and the other thing. And it really is a game changer. So if you are thinking about it, there's a lot of opportunity out there right now. So take advantage. Seeing no other questions in the chat, so if we go for about another 5 minutes without any questions, we're gonna call it a day here. But if you have some burning questions, please go ahead and ask. And while we have some idle time here, I do just want to let everybody know that on our NRCS New Hampshire YouTube channel, this recording should be posted by the end of today. So if you were able to join us a little later than you anticipated, we will catch you up on there. There should be a link in the chat below, but if you just search for NRCS New Hampshire on YouTube, you'll find a playlist there for webinars, NRCS New Hampshire, and that will contain not only this one, but the 3 previous ones as well.
Pipe up and ask or mention one thing. If you apply to either of these programs, electronically is the preferred method. Email. that's difficult for some folks who, may not have strong bandwidth or Adobe Acrobat tools. We understand that. So if you do need to mail or drop off an application for either program, please send it to the Concord office for now, at least, for the foreseeable future. In fact, we, our state office is in Montpelier, Vermont, which is where Tracy and I are both based out of. And that was pretty much destroyed in the floods of July and August. Even though we're on the third floor, we won't be going back to that building anytime soon. And if people show up to see us or FedEx a box to that building, it causes problems because the only people there at the moment are contractors trying to put it back together. So they may turn your package away. If you do mail something to Montpelier, it does get delivered to us. It takes a little more time. It has to go to the Barrie post office and get picked up there because the post office in Montpelier, Vermont is also the same building we work out of. So they don't have a post office currently. Just wanted to point that out.
It's certainly good information. Yeah, it was devastating floods up there in Vermont last year. We certainly felt the rainfall here this year in New Hampshire, coming on the tail of 2 years of drought status. So climate resiliency operations is something that is certainly within the focus of USDA and the agencies right now. So very, very welcome comment there, Ken. Thanks. All right, folks, we're going to give it about another minute or two here, and then we'll call it a day, and we'll catch you on the next one, which will be next Thursday, session 5, and that is NRCS programs. So we look forward to seeing you there. Please register online, and until then, give it another 30 seconds, and then we'll go dark on you. So thanks for showing up, and hopefully you found this information helpful. All right, I think that'll do it. Thank you so much to Rural Development for this sort of overview on those 2 programs, and hopefully we'll have some people that are interested in ways that you can help them in the future. So, gentlemen, thank you for your time, and have a good day.
You. All right.
Thank you.
Take
See
care,
you all in the
everybody.
next session.
Thanks.
Take care.